resistance, and it's wearing mighty thin. I've got the feeling I should leave before the roof caves in. My mind tells me to move along, but my body begs me stay. And now I feel the need to hold you close and love the night away, while you're turning me every which way but loose. You turn me every which way but loose. Inside the fire's burning me. In my mind you just keep.
Hey, it's Soleil, and this is episode, whatever the hell it is, 581 of the Orange Pill Investor. Back from a week off, a little rusty. Forgot to connect the AirPods. All right, I think I'm good to go. I did switch. I was having problems with shutdowns a few months ago. Had the brand new laptop worked on, and had to switch it over to like eco mode, which is ridiculous for an expensive ass laptop. So I finally got the balls to put it into balanced mode today for a little bit more performance. And and so if I get the black screen or whatever and get my live interrupted, then I'll know that was the problem. But let me go ahead and just reshare before I forget. Wait, performance warning. What does that mean? All right, let's reshare without sound. Oh boy. Yeah, that's exactly why I picked that one out. Was for the white folks in the back. YouTube is Marxist. Okay. What's up, Emperor? Back like we never left. Yeah, man. I'm getting super nervous about these extremely aggressive at the money covered calls I've been selling. And I'm really just tiptoeing around moving, violently up at some point. Really trying to thread the needle here because I'm still fighting this damn margin use that I got. And there's a guy Sminston with who's got a pretty decent account on X, and she started making videos on YouTube. He's got 2 videos out so far, and his name sounds so weird, and I'm like, why does it just sound like not right? And then I was like, oh, it's probably Winston Smith, and he just put Sminston with, and it's taken me a year to figure that shit out. Which I don't even know if that's his real name or if he's just half-assed anon. I mean, he doesn't show his face, but as far as I know, so maybe he's double blindfolded anon, and Winston's not his name either, or he's just got the worst anon name ever. But anyway, he was talking about his quantile power law chart. He's got a nice little rainbow thing, and we're like in the bottom 5% of the channel for as far as Bitcoin's price is concerned. And like, I like math and all, but he's talking about regressions and blah blah blah. I worked in the lab, and we worked a lot with standard deviations. And so it does seem kind of similar, but, that's probably more algebra, and I think he's probably using some calculus. And the bottom line is, we generally don't stay at prices in this low in this type of channel. I think he said we briefly dipped below the 3% or 1% channel, something like that. and we definitely don't stay in there very long. The 5% channel that we're in right now, I think he said you only normally only stay in that for like 20 days per year. And that's going to be an average, because during a bull market, you might not be in it at all. And then in a bear market, you might be in there 40 days. And if you got one bull plus one bear, averages out to 20 days. But it just seems like we can't stay at these prices for too much longer. So I'm really starting to feel kind of nervous about this. And while I was on vacation on Friday, I actually had to hurry up and trade. I can't remember if it was I think I was sitting like waiting for the fucking sunrise in Tucson, because the market was already, that was 6:30 plus 3 hours. Yeah, I think the market had just opened. Anyway, at some point on Friday, I had to hurry up and roll my 137 covered calls, because the price was 140, 149, something like that. And otherwise, like, all of my shares would have got called away, which wouldn't have been the end of the world. I'd have just bought them right back, but it would have reset my my cost basis and the time I've held the shares. And I'm a little bit under my cost basis anyway, so it wouldn't matter as far as taxes, except if I bought them right back, then I hit washout roll. Anyway, I was able to roll those out, and I just rolled them to like whatever the most aggressive strikes were. Not Tesla. Yeah, right here. Yeah, I think the price was 147. So I just rolled them to 147, like no upside whatsoever. And it looked like it was going against me. I think we went up to 149. Where the chart? There we go. So, what was that, the 13th? Yeah, the high was 147. Okay. Maybe it was after hours. Maybe it was after hours. Anyway, I thought it was pushing 150. And so I started getting a little bit nervous. But then, of course, right after I paid the actually, yeah, this wasn't even the end of the day. So I rolled like right here. And so I paid literally as much as I possibly could, unfortunately. And then within the same day, this is kind of it's called getting whipsawed, right? You roll at the top, you have to pay for all of the, pay for the roll. And then the price, before close basically came almost right down to the exact strikes that I had. I think I had the 137s last week. So if I would have had the luxury of just sitting on my hands all day, maybe I could have caught this. But that's only in hindsight. Like, the price could have went to 165, and I would have just been making things worse. So you kind of have to be ready for this, especially if you're going to be selling weeklies, and near at the money. There's tons of gamma risk here, and kind of playing with fire. But I'm kind of looking at it like, if they need to pump the market for midterms in November, let's just say by October, to really get a solid pump and get people motivated. Not that it's going to do any good, because Trump's approval rating, he basically squandered a gift from the Democrats. His approval ratings were amazing coming into this term, and he basically pissed it all away on war for Israel. So that's fun times. However, it's going to take us like $1 million per missile to shoot down $50,000 drones. So I don't know. They probably got 100,000 of those fucking things. So whatever 100,000 million is, that's how much it would cost to shoot down their entire arsenal at this point, assuming a 1-to-1 hit. And I think sometimes they've been using, they've had to even use like 5 or 10 of these damn missiles just to shoot down a drone. So they gonna print. They are definitely gonna print. But if they have to start doing it like 6 months ahead of October, that puts us in April. So I might have another month, maybe 2, to get my shit together. And so the title of the episode is whipsawed, which is what's happening here. You know, the price of strategy is just bouncing around. And now it looks like maybe I will get wrecked again this week if this keeps traveling up and away. It is nice to see some higher highs and higher lows, however, after getting wrecked on the longs for the past year. But keep in mind, this ain't much. Like, this is only just since February 5th when we bottomed at 106 on earnings. So this is encouraging, but I don't want to get too over my skis with this. So I ended up, paying to keep all my shares, and what I ended up having to do in order to pay for it was there was a PMCC with no number. So I basically dumped my PMCC 1, which was like I don't know if it was like a 75 strike long call. And I released about, I don't know, somewhere between 8 to 10 in buying power there by closing that position. And I also covered that short a fucking day late. So I had that STRC, I had 200 shares of STRC short on, and that gave me about 10 grand, I think, of cash, and only subtracted about 5 grand of my options buying power, which worked out. It was basically kind of putting a band-aid over my margin usage. I went ahead and covered that a day late, unfortunately, because I wasn't thinking about it while I was hiking around the desert. And so I ended up having to pay that dividend, which is annoying. But I don't know. I guess it was like a $200 lesson in shorting that I learned. And I thought about putting it back on. Like so I kind of feel like I right-sized the account a little bit by selling that poor man's covered call, and then covering those shorts. But let's just see if I tried to put this back on. For every 100 shares, I can get a $10,000 credit to my cash, and only is deducting a $5,000 debit from my options buying power. So I could keep playing these little games with the margin use, but it wouldn't mean that I'm not using margin. Like if I got assigned on all my cash secured puts on my on all my options, I'd be using a metric fuck ton of margin. So just tricking the algorithm into thinking you don't have margin. Sure, it saves me this interest, I suppose, but you still have to keep track of this stuff to make sure that you don't get wrecked. And this crypto buying power is basically the same as the option buying power in a Tasty Trade account with portfolio margin. What's SMA? I don't know what the hell that is. All right, so I don't really feel the need to do this again. It was a fun little experiment, but I'm pretty okay with this amount of margin use. I did realize that I've been spending like a motherfucker, though. You would think I would retire and participated in a little austerity, but that hasn't been the case. All right, so let's check these chats and then make some trades. Say hot 98 today. Yeah, I think I had 90 shares in my wife's account. Because I had a bunch of cash secured puts in there for her, and it wasn't really deducting it from the option buying power. So I'm like, screw it, I'll just double dip with a bunch of SATA. I think her cost basis was 93, so I went ahead and just sold all her SATA for, I don't know, was that 5% profit? So that was pretty cool. What's up, Voyager? Hey, what's up, Tyler? Yeah, good times. Man, we got some bad weather outside. I can hear the rain coming down hard. All right, so I'll cover the trades that I made on Friday. I put these on, and there wasn't really much else that I did. I don't think. I might have put. No, I think I owe myself a Tesla trade. I got a little bit out of sync. So I think maybe I haven't had a Tesla covered call on for like a week or two. So that's one problem with having too many positions is you start making mistakes if you can't keep track of it all. And if you get easily distracted like myself, that can be a problem. So if you're especially like I think a lot of investors just want to own a little piece of everything, right? We want a little piece of, we want some, whatever our main thing is, right? Okay, strategy is going to be my main thing. But then I also want some Strive and I also want some MetaPlanet. And I haven't really been covering it, but I did buy 220 shares of MetaPlanet. I sent like $500 over to my E-Trade account, and I think I had like 7 cents or something in my E-Trade account. Um, the guy who actually, the fucking guy that I met on Facebook over 5 years ago, who was the one that put me onto options. He's like, you got to trade options, and he always he always had something to say, and usually it was pretty good. But he had a hard on for this stock called HMNY. I can't remember what their fucking deal even was. They were gonna be like, I can't remember if they were competing with Netflix or something. Anyway, this thing went to hell, and it's trading at like fractions of a penny per share now. But I think I still have like 10. I think I still have like 10,000 shares, but they're only worth like 0.00001 cents. So I had like 7 cents in an E-Trade account, and I think I only paid like 10 cents a share for the things in the first place. So well, it wasn't like I lost my ass or anything, but it was kind of annoying. Um, yeah, so I got I got a bunch of these shares worth nothing in my E-Trade account. So I had to send them like $500, and I got like $220 or 220 shares worth of MetaPlanet out of it. And I think there's even been discussions of like, oh, when are we going to have an ETF of just all the Bitcoin treasury companies? Every company with at least I don't know, what, 1,000 Bitcoin or something, right? So we just want to own a little bit of everything. And I think that becomes a problem when it's too much to manage, right? This account only has 3 tickers, but I've got tons of positions. I got shares, I got call debit spreads, I got more call debit spreads. I got a synthetic, I created a synthetic stock position, and now I'm selling covered calls against it, right? So, with strategy, I've got a fucking dozen positions here to keep track of. So it really shouldn't be a surprise that I screwed this up somehow. But anyway, just starting at the top, I sold these 2 weeks ago for $1, and they really haven't depreciated. Well, I can't buy them back cheaper. In general, you're hoping that the price of this stock will stay the same or go up, but Cypher's been struggling, I think, more than some of the other stocks. Yeah, so it's just been kind of ping-ponging around between 12 and 17. And so we try to make these predictions about how many returns I'll get per week or whatever. And if everything works out great, every 2 to 3 weeks, you want to be able to roll this for half. Well, it's already been on for 2 weeks and it's worth almost the exact same. So that's not happening. In another week, maybe this drops to 65 or 70, but it's still not going to be quite there. And even if it did, this would be collecting about 7% over a 3-week, what's $1 divided by 13? so $100 divided by the 1,300 I gotta put up is 7%. If I divide that by 3 weeks, actually that's about 2.5% a week. So that's actually pretty legit. But not only that, that's like the whole point of the margin is that I'm not even putting up that much because they're only counting $130 against me. So not even the full 1,300. So this is like 100% returns over a 3, maybe 4 week period. But again, you have to keep in mind that this is not free money. Like this is not your money. They're only going to deduct $130 from your portfolio. But if this goes below 13 in 46 days and you don't roll this and avoid exercise, you do have to pony up the $1,300. But it's even in that case, it's still probably only 50% requirement. Yeah. So even then, you don't have to put up the whole amount. It's really going to be a 50%. If you are in a cash account, yes. Selling a cash secured put, you got to put up the whole $1,300. You want to buy the shares, you got to put up the whole $1,500. So don't fool yourself thinking that margin is free money. You have to plan accordingly and just not fucking freak out at the free monies. All right, so I do try to get like 1% a week, but just keep in mind if the price of the stock is not participating, there's going to be suboptimal positions, and you shoot for the you shoot for the stars and maybe hope to hit the moon or something like that. Probably screwed that saying up, but you get the point. Try to do your best, and then as long as you're still beating whatever the hurdle rate is, then you're fine. All right, so Tesla doesn't look like my 100 shares are covered, and I thought I rolled this out to today because I knew I'd be back from vacation, but apparently I didn't. All right, so I formed this synthetic position at approximately a $400 cost basis. I think the price was 400 when I put this in. So this is pretty break even here. Even though, not really break even because I paid 100 for the long. It's only worth 86. I sold this for 73 and I can only get a $200 discount off of this. So I'm actually down $1,200 on this position, but I have been selling covered calls against it. So it probably works out okay. Bottom line on, it's been on 2 weeks. It's not quite under 430. So maybe I'll leave this on another week. If I rolled it now, I could roll it. It's a pretty reasonable credit at the expected move. It's actually doubling the credit that I have now. So that's actually not bad. I can even roll it out $5. And this is my cost basis on the shares that I own. So that's kind of nice. Yeah, let's do it. Might be getting a little bit impatient too, because this is going to get me a little closer to my margin use goal. I chipped away at my margin a little smidge. And all right, let's ungroup, regroup. Why can't I group this position? Am I blind? Synthetic. No, not screenshots. Not screenshots. And what I mean by synthetic is if you buy a call and sell a put for the same strike on the same expiration date, the deltas will add up to 100. This basically means this is the exact same as 100 shares. I can sell any strike I want. This should be a limited, or excuse me, a defined risk trade. This here. All right, so let's add my other covered call. And so let's make them just slightly off so that I don't have to roll them together. All right, another $800. Chipping away. All right, Tesla be done. What was Cypher? 32 days left. Yeah, I could probably roll this out. Let's just see. If I roll it out 2 weeks, I could get a little bit of a credit here. But you'll notice, I mean, the liquidity is not terrible on the bid-ask spread. But on the 60-day, it was much tighter. And I guess it's just because these are the monthlies, so there's more liquidity on the monthlies. If I hold on to this for 2 more weeks for the 60 days to be at 45, that puts this at 18 days to expiration. So maybe that's probably what I'll be shooting for. What's up, AB? All right, rolled this already. This one's been, okay, so this bad boy only has 17 days left. This one's interesting because when I sold it, it was, I don't know, 10-20% out of the money. And the price is not, it's now in the money. And so there's a ton, this is all $900 of this is still extrinsic value. It hasn't lost any extrinsic value in the 24 days that it's been open. So this 45 DTE covered call is almost kind of turning itself into a weekly. I could roll this out, but if I do, I don't want to roll it out to 45 at the money, and I can only roll it up like a couple of strikes for a credit. I don't know if this is worth it. At this point, so if I want to keep doing 45 DTE with this, I would be looking to roll this at this point. Really by last week, but certainly under 20 days to expiration. However, if I hold this for another 2.5 weeks, I can collect this $900 that it's worth, and that's, let's just call it 3 weeks. That's $300 a week, which is 2% a week. So, do I want to roll this now? I think it makes sense to just hold the damn thing at this point. April 2nd. Yeah, this Friday is 4 days. Oh, Friday must be, they closed on Good Friday? Is that why this isn't the 18th? Yeah, so this expiration is going to be on a Thursday. And I will be off that week as well. Yeah, I don't think it does me any good to roll this now. There's so much extrinsic value here that I would have to pay for if I rolled this now. I'd rather just just stare at it for the next 2 weeks. However, this poor man's covered call that absolutely has been getting destroyed for the last 132 days is ready to roll for probably peanuts. And really, the 225 strike is about as aggressive as I can get, even though it's like well outside the expected move, because its value is so bad. What is it worth? The long call is worth 23 bucks. The strike is the 200 strike. It's like so far out of the money. It's pathetic. So if I add these two together, it kind of gets me in the ballpark. So the 220, the 225 strike is the best I can really do here. So let's try to get a small credit. I might have to close it and just reopen it and open the new position. I'm sure the bid-ask spread is pretty wide on the covered call that I'm trying to close. This one's not great either. 50 cents wide. There we go. All right, so that was a tiny credit. All right, let's ungroup, regroup. And same deal here. This is kind of like I could wait. It's not quite under 150, but with only 17 days left, that's quite a bit of gamma exposure. So let's roll it. And same deal here, 125 plus 50. I can roll this to about the 175 strike. So let's roll. There we go. So I really don't have much upside protection left. If I get wrecked on these covered calls again, this cost me about 10 grand last week, so I closed that poor man's covered call to cover it. Let's see, I've got two of these worth 5 grand a pop. So if we close at 160 next week, I would have to close both of these to cover, which would be fine. Then the only like poor man's covered calls I would have left would be this one little guy. And then the other long calls that I have are these. So not really a lot to protect me if we were to like rocket to 200 or something in a week. I would love to just be all long, but I kind of painted myself into a corner with this margin use. All right, cash secured puts. So there's a little bit of I almost named this one something around deciding whether to trade cash secured puts or covered calls. The profits on the premiums is nearly identical unless there's some call put skew screwing up the prices. So that's kind of not really a determining factor for me in most cases. But everything in options is opposites. So if you sell a cash secured put like I did here at the 105, or excuse me, 145, actually that's a bad example because it's Not even in the money, or not even out of the money. All right, so I sold the 105. This means that I'm collecting this guaranteed premium. So this is the max that I can make. But if the price were to dip to 100, I could receive basically a $40 discount off the current price. I would be forced to buy at 105, which is a hell of a lot better than buying at 145. Selling covered calls is the exact opposite. So the premium that you collect is the same if I was to sell a certain percent out of the money, covered call. But instead of getting a discount if the price goes down, I would be capturing some upside if the price goes up. So if I buy 100 shares at 145 and I sell the 165 call, then my account would go up in value from 145 to 165. I also keep the premium, and you're not able to capture that upside with a cash secured put. This premium that I collected is literally the best I can do. So it's kind of like, okay, am I bullish and I want to capture some of the upside, do the covered call? Am I potentially even a little bit bearish and I want to get myself a better entry price? Okay, cash secured puts is the way to go. Now with portfolio margin, at least in Tasty Trade, there's another consideration, and this is why I kind of fell in love with these cash secured puts, is if I sell the 120 in a cash account, I would have to pony up 12 grand for this. But whatever their little calculations they're doing, they're only deducting $516 from my option buying power, which sounds great, but it's almost meaningless at this point because the option buying power isn't the problem. It's my actual cash balance that's the problem. But this kind of also helps that out as well. So this is going to be a $500 credit towards chipping away at this options margin and only using like what, 1/12 of the cash that I would have to put up in a cash account. So this is extremely cash efficient. If I did 10 of these, I could, if I did 20 of these, which would be ridiculous because if I got assigned, I would absolutely get wrecked. So now it triggered something in the algorithms like, wait a minute, you're really trying to obligate. We're not going to give you the benefit of the doubt for being an intelligent trader. You've gone a little bit too far here. And now they're like, no, this is a concentration risk, and we're actually going to charge you whatever, 100% probably of, maybe not even 100%. Let's see, 10 would cost 150,000. Yeah, they're still giving me like a 40% margin credit here. But even with 10 of them, I could almost wipe out my margin use, and they're only gonna count like 6 grand against me, even though if I got assigned here, I would have to come up with $120,000. But they're only reducing my buying power by 6. So extremely capital efficient, but you have to know what you're getting yourself into with this. So I would love to just smash these, but I think that would be a little bit too irresponsibly long. Even having these 5 is probably cutting it close. All right, so in this scenario, I'm kind of in the same situation with this covered call that I'm sitting on and just waiting, right? I've got a bunch of extrinsic value. This cash secured put is the same way. I've got a ton of extrinsic value here. So what my plan was, that I'm second guessing now, was to just roll this out like I've been doing. I've been doing the roll until you're right thing for weeks. And if I do that, I can get a little bit of a credit. I would increase, I have 3 of these. So I would increase my or decrease my margin by 1,500 bucks, I would actually increase my buying power by 745. I don't know how that works. Um, but I was kind of trying to talk myself out of it because instead of paying this 900 bucks a pop to roll this, I can just capture it over the next 2.5 weeks and then potentially roll out. But that puts me at a lot of gamma risk. So yeah, I'm just gonna stick with my the original plan. Getting closer. Now these are ready to roll because I sold them for 4. They're worth less than 2. If I roll these out, and if I roll them to 105 again, I can get, a smaller credit. But if I roll up to the expected move, I can get a larger credit. And again, chip away at my margin use and only reduce my buying power by 400 bucks. So I like both of those. Let's group these again. So overall, I really like the premiums that I can collect at the money weeklies, of course, but there's like no upside here. If Bitcoin rips to 150, 200, strategy is going to go nuclear. So somewhere over the next 30 days, I have to dig myself out of this completely. I'm like almost there. And I'm hoping to be able to modify this strategy in the next maybe month or so. I really want to start adding more long positions. But certainly, if I'm capturing premium, maybe I'll even add back some of the poor man's covered calls positions that I had to take off to cover my covered calls that got wrecked. That way I'm adding long leverage, but I'm also collecting premium. It's like I guess it's like delta positive efficient, but it's also theta positive. So this poor man's covered call is net theta, 2.5, which is peanuts. But this one's a little better, 6.5. The one that I just closed was even much better. Actually, I'm sorry. No, this one is positive. This poor man's covered call is not even positive. It's actually net negative. So that's annoying. I probably should have just cut bait with this thing and admitted defeat. All right. Had to play a lot of catch up in that account. See, cash secure put leap combo starting to spin up nicely on Strive. Oh, sweet. I got to notice that my 300 shares of Strive got called away I think it was in my wife's account because I wasn't paying attention over vacation. You ever make a portfolio analyzer with Perplexity? Man, I was just looking at Perplexity this morning and I was like, fuck, I never did that damn analyzer. So thanks for the reminder. With all the AI talk and people vibe coding and all that shit, I did kind of catch the realization that there's just like you can have your, auto bill pay or whatever set up, I should probably be able to just have this set to autopilot and like this stuff that I'm doing, it's not rocket science, really. So bot could probably easily be trained to do this shit. All right, the IRA. I know I've got some stuff to do here because my 100 shares of iron got called away. And so this account is straight cash homie. I don't have to worry about any of that margin shit. And so this 5 grand in buying power. Oh, wait, what's my settled cash balance? Oh, yeah. So this is actually my buying power because I had some 40 strike covered calls in iron get called away. And I don't know what the other $900 is from. But I've got a 32 strike cash secured put. Oh, here. I've got two 13 strikes. So that's 2,600, 41, 6,100. Right? 6,100 is being set aside. Yeah, that adds up perfectly. So the 6,100 plus the 4,897 is the 10,997. So I do have 5 grand of buying power to play with since my 100 shares of iron got called away at 40. This is like perfect, ready to roll. It's been on for 14 days. It's worth half of what I sold it for. This is literally textbook. So that's kind of cool. I'll roll this out 2 weeks. Just keep the same strike. $84 credit. If I can get a fill. I don't have to worry about margin efficiency. I got to worry about taxes. I hate that I actually can't get my money, but I do like the damn, my credit is disappearing. Okay, there we go. Cypher, same. It's worth about half of what I sold it, but I had to wait 27 days in this case. And when I was trading my wife's account, I was kind of pissed because I got a really bad fill on some of her positions. So I wasn't too happy with Tasty this morning. I wasn't really paying attention. I was just kind of going for the mid price, and they auto filled, and I was like, let me do a test and see what it's going to take to get like one filled, and I got like, I don't know, 20 cents per contract better. So for like 10 contracts, I think that cost me $20 a pop. So that was a little bit of annoying. All right, this is ready to roll. It's half of what I sold it for, 2 weeks old, right on time. Tesla's always very liquid. Look at that. It's right at the expected move. This is easy peasy. No brainer. Tesla done. Oh, that's right. I've been stacking 4 shares of SATA. So if I need cash, maybe I'll dump those for a little bit of a profit. X dividend is coming up, I think. End of the month. All right, the 150 strike covered calls. Again, like this is barely out of the money. I feel like I should just sit on these and capture the little bit of the extrinsic value that's here. Let's see if I roll out. It's like, yeah, I'd have to roll. I could roll up for basically, I could roll up to the expected move. And so that's not a bad deal. Except that the bid-ask spread on that is terrible. All right. That wasn't really for much of a credit, but I was able to give myself another, what, $10 of upside breathing room here. Poor man's covered call. Won't be able to get much of a credit here, but I do need to roll this out as well. So let's see if I can roll this. Wait, what's the all right, the strike is 125, it's worth 50, so I need to roll out to the 175 or higher. That is for a small credit, so let's make that happen. All right, that should be everything. And my maintenance excess should be my actual buying power. So I can spend 6,600 bucks. I could add another poor man's covered call at these exact same strikes. But that's kind of pushing it. The delta on that is 70. What can I get farther out? So the 100 strike would cost me 70 something. And if I sell the 175, 6,700 bucks, I can get close. So actually, if I sell, yeah, if I sell my SATA, let's just sell it. And Michael Sullivan, the guy who wrote Blood of the Bourgeoisie, the Bitcoin fiction novel, he had a really good tweet, and Dan Hillary even replied to it as well. And it was something along the lines of, we should be buying strategy when people are euphoric about stretch, and buying stretch when people are euphoric about strategy. And I think that's totally makes a lot of sense. Like, stretch is the iPhone moment. Okay. It's generating $1 billion worth of Bitcoin in a week. Okay. That means, strategy's price is down as fuck. I want to be backing up the truck to buy strategy, not necessarily a preferred right now. That's me personally. Everyone's financial situation and portfolio is different, but I think the whole point is that the like stretch for retail has a certain specific function. For me, I use it as, just a little bit of dry powder trying to stack. Um, and then once I take profits, like if strategy does pump to 500, 750, 1,000, whatever, when I take profits at those levels and I just need to like cool my head off and think about what to do, because the emotions of that is going to feel so crazy that maybe I just take 20% off the top and fucking just throw it in the stretch. Give myself a couple of months to dust myself off and figure out what to do next, and see what the price does. Something like that kind of makes more sense. But stretch is really just being marketed as a substitute for bonds. And me being kind of a vol junkie, it's not that appealing to me until something like God candles happens, right? Then it'll start looking much more appealing. But let's see, this freed up. Okay, so I got $7,000. I think I can place that other trade now. So grab the leaps, $100 strike, 45 out, sell the 175. Annoyingly, it's right the exact same strike as the other one that I sold. But maybe I can just piece them all together. Ungroup. And let's add this one in. MCC. This is not a very smart ratio of shares to leverage position. But since this is an IRA and I probably won't be able to touch this money for 10 years anyway, I'm kind of okay with it. But if strategy would have crashed to 75, right? World War III hits, whatever. These positions would get pretty ugly really fast. So generally, performance covered calls, I don't know, probably shouldn't be more than 10-20% of the portfolio's value. And let's see, 100 shares of strategies, $15,000 times 2, 30, and this is 15, 22. Yeah, this is like a 60-40 ratio of shares to performance covered calls. This is like way out of whack as far as ratio of leverage to non-leverage positions, but I'm okay with it. I did everything I needed to do, right? Yep, Tesla done. Cypher done. Iron done. $200. I can actually buy 2 of my SATA shares back. This is what I love about the IRA. I can just, I don't have to worry about wash, sell, roll. I can just do whatever the hell I want. I like it. Let's see. Yeah, you can definitely get Perplexity to understand your port and what you look for. You can get really far with just chatting to it for a while. You know what I was looking at? Because I wanted to do the whole open claw shit too. But somebody's podcast that I was watching was kind of warning of like, if you give these platforms access, people are just giving like root access to these companies, and that's kind of scary. And I can't remember if somebody that was on BTC Sessions interview. I can't remember, but he was basically claiming that shit like this is going to be like the greatest data breach in history. Once somebody hacks one of these AI companies that we've all given access to just everything, it's going to be pretty fucking ugly and massive. What did they report on the other day? I think it was Pokemon Go has been used to basically document like every square inch of the Earth's surface. People walking around catching fucking Pokemon, and we've basically just been donating data to companies. But anyway, so I wanted to do some of that vibe coding shit, but I'm like, okay, maybe I'll do the. This guy was saying if you keep it local, keep all of the software local and just don't let it touch the internet. That's a safer way to go, but I don't know. I don't know how viable it is. I know it's probably a lot easier to just plug and play and put in your username and password and tell it to go nuts. But I feel like I'm paranoid, but I'm also paranoid that I'm not paranoid enough. So not really sure what I don't know at this point. All right, I think I've got so I got $2,000 of buying power here, but I've got cash secured puts that add up to, let's see, 214.5 is 29, and 26 is 55, 65, 69. So I've got like $6,900 worth of obligations here, and this account's not worth $1,600. So even though it doesn't look like I'm using margin, I'm definitely using margin. And still, but that $2,000 I could probably buy. Could probably get away with buying 20 shares of SATA. I think it would let me. Yeah, it's not saying I don't have enough. So I may consider doing that or just adding a couple. But let's see what I need to do here. Sold it for 2. It's worth 115. It's got 17 days left. This is basically ripe for rolling. Rolling to at the money strike. I guess I'm doing the whole roll until you're right thing here as well. Oh, appreciate that, AB. Did I even click on that? What's up, dude face? See, looking good. Where's that gladiator energy? It's hard not to be bullish here. Seems like one more dip and then face melt time. I'm biased though. Yeah, I've been kind of enjoy watching you cook. I appreciate that. Yeah, it's not the same. Like I've been binging Simon Dixon. What's his account? Simon Dixon Twit or something. I've been binging a lot of his stuff. I love all of his conspiracy theory shit. I mean, I don't even think it's conspiracy theory at this point. I think some of his predictions may be off, but the way that he describes the world and the financial industrial complex and the military industrial complex and all that shit, that all seems pretty fucking reasonable to me. But he's got a couple of sections where he just tells AI to compile a 10-minute video of his opinion or whatever. And I kind of find that portion of his videos the least entertaining part. I know it's efficient for his use of time, so I get it. And that's probably what we're going to be all doing over the next 20 years is relying on AI. But Yeah, I mean, if I just told my AI bot to go do its thing, and then I set it up to record, I'm like, here, go watch my fucking AI avatar. Then again, the AIs are getting so good, maybe no one would notice. That's interesting. That would be a good test. I got excited because I thought Jeff Booth was on Twitter again, but he actually set up his AI agent to just post on his behalf, and it understands a lot of his philosophy. So um, it says it right on his profile. You know, this is not me. This is a bot that I set up. All right, so I rolled that one out. This one's got 32 days left on it. Still got a bunch of extrinsic value, so I think I'll kick the can down the road. Yeah, same for this one. This is also not ready. But I did just collect, what, $100? Hmm. I'm tempted to just be a degenerate and spend it on some. Well, these aren't 1080s, but it's the highest strike in the chain. I think they pay dividends in 2 weeks. Let's buy two. Let's buy the two more shares. I think I just collected $200. Yeah, my cost basis on these is still 90. I got a really good deal. I could take that 7%. Yeah, what would it look like if I just closed this? I know I just bought two shares, but if I closed it, I could get $1,400, which means I could sell another cash secured put. That's kind of what the whole point is. It's kind of the whole point. Stack dry powder. You know what? I bet you would let me just go ahead and sell an extra one. No, not SATA. You know what? Wolf was giving pretty good. Pretty good capital efficiency here as well. Yeah, let's do that. You know what? Did I just sell at the bid? That's going to piss me off. I wasn't paying attention. I got 94 and the mid price is 112. Yeah, I probably should have been paying attention to that. I think I just smashed the bid here. Yeah, that's annoying. I probably should have gotten paid over $1 for this. That's the risk of having too many positions and getting a little too click happy. But yeah, I probably should start rotating some of these positions over to something else. So maybe if Wolf is still trading well in a couple of weeks, maybe I'll move one or two of these positions over. All right, so I was able to pick that up, and I didn't even have to sell my SATA. So maybe I'll hold on to that until I get paid the dividend at the end of the month. All right, the 5K account. Let me know if you can hear my dog snoring at my feet. It's loud as hell. All right, I don't think I had anything called away. Nope. So I rolled these out already on Friday. So I rolled the 9.5 call. Currently getting wrecked on that, so that's always good. And I'm basically kind of running like a covered strangle here. I have 100 shares and I'm selling a covered call against it, but I'm also selling cash secured puts. So this I could roll up to the 10 strike, but 20 cents on a $10 stock for less than a week is still a 2% return. So even though I've already collected 2/3 of this premium, I can still hold on to this for the rest of the week and collect another 2%. Let's just see what it would give me if I roll this up. I don't know if I have enough cash. All right, so I would obligate myself to another $100 of options collateral rolling up from the 9.5 to the 10.5. And that would give me a $40 credit almost, $35 credit. And if I do that, I put myself in the unfortunate situation of I would have my cash secured put strike above my covered call strike, which is generally a bad sign. It means you kind of got whipsawed here on this position. So, and right now I'm literally selling the cash secured put and the covered call in the same strike. It's like both of these can't even win unless the price expires at literally $9.50 exactly on Friday. So this can happen. It's not the end of the world, but it's definitely not optimal. All right, so I rolled Cypher to this week. That's going well. It's almost perfect. And then I added this Riot cash secured put as well. I think I rolled this out on Friday. I won't be able to roll them all up. So I'll probably have to choose which one of these I want to roll up. Because I only have like $100 of buying power available to avoid using margin in this account. So we'll see what I can afford to do on Friday. But I won't be able to afford to roll the Strive put up and the Cypher and the Riot puts all, depending on what the price does. I probably won't be able to I won't be able to afford to roll them all up. But I don't have to make this decision now. I can just chillax. That should do it. Easy work. Dudeface says, I wonder what Sailor's thoughts are on AI security of data. Yeah, I've actually got another question for him. If they ever let me on the earnings call. Oh, man. So I think Jeff asked the question? Ben. Ben asked the question. Dan asked the question. I'm like, well, they let me on the earnings call. I wanna know what he's gonna do if they take him to room 101. If anybody doesn't remember what that is, that's the room in 1984 that they take you to for re-education, and everyone breaks in room 101. So when you are the leader of a company that has 750 plus thousand Bitcoin, soon to be 1 million Bitcoin, you got to have a plan for when they drag your ass to room 101. But I don't know if I've got the stones to ask that one on the earnings call. But that's what I'd be interested in. But your question is also pretty good, so maybe I'll keep that one in mind if they ever decide to let me on. He did say that he I think isn't Strategy going to put some money up to pay for some developers to start researching what Bitcoin needs to do to secure itself for quantum threats? So he must be thinking about it. It must, and that's the very first thing that I've ever heard him publicly say where he's like, you know what, we want to have some kind of influence on the code. Usually he's like, look, I'm against well-meaning developers changing the code. So he usually tries to keep out of it, other than just saying, cautioning. Like, as far as I know, he hasn't tried to fund any developers up to this point. But that quantum threat, for some reason, maybe people just keep bitching and moaning about quantum FUD, and he just felt obligated to, I don't know, maybe reassure shareholders. Maybe he's got some institutional buyers in the background saying, hey, we're worried about quantum FUD. Like, we want to be reassured that you guys are taking this shit seriously. Um, that actually makes more sense than him actually changing his stance on influencing code development. Yeah, I bet some big money people were like, "Hey, what's the deal with quantum FUD?" And he's like, "It's fine. We'll throw a few $100,000 or something at a developer to deal with it." Cap Capper Crypto. Let's see. What percent of your account do you use on margin? Do you have an amount you look to keep it under? Um, in November 2024, when we were all over the moon, I got it to zero. And I think that's probably the smartest thing that I've done since I've started trading. Was in that euphoric moment, I just took enough profits to at least not be using any margin. That only lasted about, I don't know, 3 to 6 months. And I wanted to invest in Swan. There was some kind of private, private, was it Class C shares or something? And so I didn't want to sell any of my positions. So I just dipped like 50 grand into margin. And at that time, that was probably a reasonable amount compared to my account size. It wasn't that big of a deal. But strategy's down like fucking 75% since November 2024. So that amount of margin use here was fine. But the margin use didn't go down, but my portfolio went down 75%, but my margin use didn't go down, right? Because the whole time that the price is crashing, I'm not really making enough covered call premium to keep up with my lifestyle since I quit my job and deal with Strategy's price collapsing. On their earnings call just the other day, I actually got a margin call. I mean, I literally got called by the company. Tasty Trade called me on the phone, and they're like, "Hey, Strategy's volatile today. We changed our concentration requirements, and before it was like, okay, $15,000 worth of strategy would cost you 7.5 grand, but they were like, now we're requiring like 80 or 90%. So I had to switch around some stuff. So even though when I got that margin call, I would say I was using about 20% of my account's value in margin, which seems pretty reasonable. But just keep in mind that the platform can change the margin requirements on you at any time. And then you've basically got, like, by the end of the day or maybe 24 hours to cover that position. So it's a very difficult question to answer. And I think my strategy right here was pretty good, because I actually planned, okay, I'm going to keep 1,000 shares of strategy. My plan was to at least keep 1,000 shares of strategy through whatever bear market was coming. I've been able to do that. And I felt like if strategy went down 75% from 500 a share, so down to about 125, I felt like I could still pay the mortgage, keep the lights on, all that good shit. That was put to the test because strategy was below that 125. Like 125 was my worst case scenario, and it was down to 106. It flashed down to about 100 a share, I think, this day. So my plan basically took into account what if strategy crashes about 75%, and it actually did crash about 75%. Doesn't mean it can't crash 80 or 85 or 90 and dip below 100. I know we're all getting fucking bulled up again. But if that happened, I'm using a very, very small fraction of margin now, right? This margin I'm using in this account is down to like $4,000. That's basically amounts to not much at all, right? If I got a margin call, using $4,000, I mean, that would literally just be taking off a few positions here. It was just not even it wouldn't be much of anything. Yeah, I can't, that's too close to giving financial advice for me to say like, okay, if you got $100,000, you can use $10,000 in margin. Like it's going to depend on the volatility of the asset. I mean, if you wanted to use margin to buy stretch, you can probably fucking go nuts with it. As long as your margin rate is under the interest rate of the preferred, you could probably go crazy with this. Assuming its volatility continues to decrease. But, if Bitcoin dropped to 40K, strategy crashed to 75, does stretch take a hit too and drop to 90? Like, I mean, you have to be ready for all of these scenarios. So I think that I got off on a little bit of a tangent, but you kind of have to like imagine what is the worst case scenario for my core positions and what would my margin use look like in the worst case scenario. Part of Sailor's triple maxi plan does not include margin. It's basically all unencumbered debt, signature loans, a loan against your house, a loan against whatever, a loan against your car, anything that's not dependent on the price of the stock or the price of Bitcoin. Using margin, this should be used with extreme caution. And it's why, even though in November 2024, I thought I was using a very responsible amount of margin, but when I stopped using it, I actually felt this huge weight off my shoulders, and I didn't realize that it was stressing me out. I didn't feel stressed until that stress was gone. So, yeah, I think that's kind of an impossible question for me to ask. But I mean, the $4,000 that I have left is nothing. In November 2024, when I started using that 50 grand worth of margin, that was probably about 2.5% of the total portfolio size. But then my portfolio size shrank by 75% since then. So, yeah, you've got to like plan for worst case scenario and then say, and then what if it's even worse than that? Buffalo says you have so much content, could definitely train an AI on your voice and mannerisms, which means you should have some sort of anti-AI scam training for your wife and kids. Yeah, I was just talking to my I was talking to the customer service lady at my cell phone provider. I think it's my cell phone provider. My cable provider. And I was telling her about that. I was like, I've been social hacked at least once, possibly twice. I think one happened in person, actually. I think they were hitting me up for personal information at one of the meetups. But yeah, no, I was telling her like they've got things now where someone will call and it'll be like the voice of your kid. Oh, I've been arrested. You gotta bail me out. Call this number, and so I can get out of jail. And then like you basically are sending an AI scammer bail money for your kid, and it sounds like your kid, but it's not. And I was telling her like you have to have like a freaking safe word for your own wife and kids at this point. So we'll have to figure out a nice, good, safe word. And who knows if that's even going to be enough. Maybe I'll have to get like Google Authenticator for my own kids. I wonder if that's a doable. Yeah, you're welcome. I know I can't give you an exact answer, but other than use extreme caution and plan for the worst. All right, we're all caught up on the chats. All the trading is up to date. So it's good to be on vacation, but it's also kind of good to be back. So good talking to you guys again. Thanks for tuning in. Be good, Joel.